Hello, it's Sandra Pike from Roll Page Atlantic and the Pike Group, and it's Real Talk. And today I have Sharon Freilich, and my God, Sharon, you and I go back like
a long time.
Oh, very long. And you were formerly with OT Insurance.
OTC Insurance,
OTC, yes, who got bought out by Newfoundlanders.
Yep.
And Steer Insurance.
Mm-hmm.
And what prompted me to call you was not how people were going to be dealing with their insurance and the fires, what just happened here locally, but I said to my husband, I'm like, what about our insurance? Like, are we covered? So if it's okay, just to ask you a few questions.
Yes.
So if I had purchased my house, let's say 15 years ago, and my house 15 years ago would have been about $265. On the market now, I can probably sell it for $600. House burns down. What am I covered for? Like the $600,000 market value?
Okay, so on the insurance aspect of things, we have to ask a lot of questions too, right? So if you were my original client with the original house, I would have had to ask you information about the construction, the location, your value, what you purchased it for, any upgrades. And then from there, if it was at $275, and then it's 10 years later, and you're thinking, oh, geez, I haven't done anything or talked to my broker, or my broker hasn't called me. It's very wise and very smart to keep in contact at least every 2 years, unless you make a change. Because your insurance documents, your deck page is what you are insured for. And the 4 important things that you should note is the dwelling limit, your contents, your outbuildings, and your additional living expenses.
So at $265, if I didn't get in contact with you for the past 10 years, what would the replacement value of my house be?
Okay, so 10 years ago, if you didn't reach out to me, there would be an inflation factor that we consider and that are applied to all insurance homeowners policies. So it could be anywhere between 2 to 7% over a 10-year period. Each year, right? So if it was $275, you could be at $365 now. This is a general example, but it could be $365.
But yet I could sell it for $600, potentially.
Potentially.
So by reaching out to a broker, well, no, before I get to that part, so you look at, let's say, the poor victims that are in Westwood Hills.
Right.
And if they didn't update their policy, and I mean, replacement value, some of those homes out there are like at $800,000.
Right. So one of the most important things is to always look at your policy documents, because there is a replacement cost. There is a guaranteed replacement cost, and each company represents those in a different way.
Yeah.
So when you have a guaranteed replacement cost, as long as you're within a certain parameter, you can get that value back in your home. But generally, if you're underinsured, there could be a co-insurance penalty clause, or you could be underinsured. And that's
I think that's probably going to happen a lot. What would cause someone to be uninsured?
So,
or
underinsured.
Yeah.
So underinsured could be that they, in the last 5 years, not contacting their broker and automatically renewing their home insurance policy, they finished their basement.
Yep. Okay.
So if the basement's not finished, or the basement is now finished and they reported it not as finished and didn't update their broker, that becomes an issue. So when the insurance companies are coming in and say if it's a total loss, they may look at that and say, okay, well, it wasn't disclosed on your questionnaire or on your renewal that your basement was finished. So that poses a problem. Another thing is you could put a hot tub or a swimming pool in and not notified your broker. That's another problem. You could build a garage or add an addition onto your garage. That's another problem. So when you're looking at your home insurance policies, in most cases, you have what we call the dwelling, the outbuilding, the additional living expenses. So those all make up a portion. So your home, say if it's insured for $275,000, then 10% of that is allocated to outbuildings, which would be $27,500. But if you have a garage on your property and it's $50,000, you're underinsured right there.
So should I be reaching out to my insurance broker like every other year, or just when I change?
I would, if it was me, only because I'm an insurance broker, that I would probably, anytime I was making a significant change that I knew it was going to affect my insurance, or I'm doing something that I'm like, oh wow, does my insurance company know? You know, like, are you putting a basement apartment in? Are you renting it out? Are you having, you know, your family living with you? There's a whole lot of things that you need to take into consideration, because if you're having, it's just you and Ben living here, for an example, and I have in my house, me and my husband and my kids. If all of a sudden my parents move in with me, or I have a friend live with me, it's important just to let them know to extend contents and liability coverage to that individual. So on any situation or any circumstance, I would consider, do I need to let my broker know, or do I need to let the company know? Because those things change your policy.
And I would say some people are afraid to reach out because they think it's going to dramatically increase.
Absolutely. And in that case, that's when you talk to your broker, because there's other ways that you can discount your policies, like increase your deductible, you know, talk about like, I don't have a garage, I don't have this. There's all kinds of things, but the most important thing is to always be insured to value, because in these situations, there's going to be like a lot of people that are going to sit back and think, well, I should have done that and I should have done this. It takes one phone call and it's free just to call and make a question.
But insured to value, would you say most policies are like that, or?
I would have to, you know, kind of look at it, but in our office, like, we do an annual or a semi-annual policy review, and every time one of my clients will call me, I'll ask them general questions, like, have you made any changes? Is there anything new going on? You know, do you... any reason to increase your deductibles, increase your contents? Do you have a pool? Like, I ask those general questions. So on your point of view, as being in this home, you would sit here and think, okay, I'm just gonna look at my deck page. I wanna see what my dwelling is insured for.
Yeah.
So that's the most important part of your policy right there. And the next part is to look, do I have basic, broad, or comprehensive coverage?
So what would basic?
Basic would be just like when we first started selling home insurance, it would be just like your fire and wind and falling impact from something out of the sky. I know that sounds crazy, but it's true. And then you've got your broad coverage, which is a bit more. Mm-hmm. And then you have your comprehensive policy, which is the broadest you can get.
So back in, you know, during COVID, when you look at the values of homes,
yes,
like they would have went up by 24%. And usually, I mean, granted, prior to COVID, there was almost like guaranteed 2% increase each year.
Exactly.
Yeah.
Yep.
But now, I mean, we just had that big 24%
increase.
So
yeah.
Would that be something to take into consideration?
One of the other things that drive like the value of homes is the cost of everything.
Yeah.
You know, like your flooring years ago, you could probably do this whole house, we'll just say for an example, for $2,500. Now you're looking at double to triple the price of material. So it's not only that, you know, my house was $275 10 years ago. Now they're selling them for $800,000. It's what's it gonna cost to rebuild it with the material pricing as it is today, and the labor costs and the availability. So you have to make sure that you're not only insured for your dwelling and your contents, but your additional living expenses become a portion of that. So, and that's what it costs you when you're outside of your home.
So I've heard stories, you know, of people who had to, you know, they were evacuated from their home, and other insurance companies, you know, if they had to go to a hotel, their policies were kicking in automatically. Right. While others didn't get the money. And some people, you know, they probably wouldn't have had the money to be paying,
the extra expenses.
So why would some policies give more money than the next?
So,
or quicker than the next?
Right, the quicker than the next. I do know that some of our companies that we represent were up at the BMO Center, and they were, you know, there to make sure that our insureds or our clients knew that they were there so that they can help them. They were either, you know, telling them what to do, where to go, how to make this happen, handing out checks. You know, I feel that, you know, the insurance industry, because this is the first time that this has ever really happened, especially in Nova Scotia, that most of the companies stepped up. We have what we call mass evacuation under our insurance policies, under our home policies.
Our co-host right now is joining us. I didn't introduce you before. She comes over, that's why I have her little bed, and you can get in here.
I think she wants to come up with me.
She'll be happy in her bed.
Yeah.
Okay, sorry about that.
No, that's okay. So mass evacuation is one of the coverages that are under our policies, and each company, like Aviva, Dominion, Travelers, Wawanesa, Economical, they all have that portion in their wordings. And what I mean by wordings is under your policy declaration pages. So they have special limits, like some waived the deductible, some didn't. Some have a special limit of $2,500, some don't. That's under the mass evacuation. So that's one portion of what happened out here in Halifax with the wildfire. And then the other thing is like your additional living expenses, and that's under your home insurance policy. And additional living expenses just cover you for the things that you would not normally pay.
Yeah.
Like, having to put your dogs in for kennels because you have nowhere to put them, having to stay at a hotel because you have nowhere to live, having to get more clothes because, with the evacuations, most people left without their medication.
Yep.
With nothing.
I mean, in addition to, having to be in a hotel, you still got to pay your mortgage.
You still got to pay your mortgage. And those are the normal payments that you have to make. So those are not covered, but your additional living expenses are. Yep, so anything that you would pay over and above.
So, hopefully for the general population of those who lost their homes, this should be an easy process.
We hope, From the claims point of view, I can't comment on it because I don't do claims, I don't settle adjust claims, but I can definitely tell you from a broker side of view where we sell service, send out renewal checklists and deal with our clients, that hopefully, our clients are going to be okay. That they will, they will come out of this without, I don't even know if it's like, you can't even use hardship because it's just a terrible situation. But
it's brutal.
Hopefully that, when time comes together and they can start repairing their lives and rebuilding their homes, that they'll see that the insurance industry is here to help them.
So what if I am out of my home? So my thoughts are when I look, what happened during COVID, how long it took homes to build. And on average, it would have went up over a year. But let's say now it's, for argument's sake, is 8 months. So about time you get the insurance adjuster in there, it could be 12 to 15 months before you're in your home.
I think that the biggest thing that they're going to have to do now is, and this is again is, an insurance perspective, is that there's a lot of things out in that area that have to be taken into consideration, like environmental issues and, like how long is it going to take for them to actually be able to rebuild, and where's the manpower coming from? Yeah,
but from a evacuation, I guess coverage is what you... you would need to have enough money for 15 months.
Absolutely.
To cover you, let's say, if you get to a rental. Mm-hmm. So you would want that. You would want the rental part for 15 months. And because you still got to pay your mortgage.
You still got to pay your mortgage. So you still have to pay your mortgage, and you're still going to have additional living expenses. So I'm not sure, like I said, this is the first time that this has happened. So I think it's going to be a big adjustment because there's not enough places for people to live, at their accommodations that they're in now. Because you're going from 2-story homes that are over, 2,400 square feet to possibly living in a 2-bedroom apartment that's 1,000 square feet until they figure out how long it's going to take to do what they need to do.
Yep.
And additional living expenses, like you said, you were asking, like, what is the amount that's available? I can tell you that under most wordings in the insurance policy documents, that it's 20% of your total value of your dwelling amount on your deck page. So if your house is insured for, we'll round it to 300,000, 20% of that is for additional living expenses.
So that's 60 grand.
Yeah. above and normally what you would normally pay. But like, I can't stress how important it is that those are the hard conversations that each individual is going to have with their claims adjuster and their insurance broker.
Wow. So I didn't realize that that's what it was because...
Yes, it's a breakdown.
Oh yeah, if you look at, let's say 60 grand, for example, you're looking at, anywhere between $24,000 to $32,000 of that just for rent.
Yeah. But then, and I don't know, how to, like, say, for an example, if it was, if I was in that situation, the insurance company that I'm with, it's unlimited for your dwelling amount, right? So, but then you still have to have an amount that's allocated to additional living expenses. So I still have to pay my mortgage. I still have to buy groceries. I still have to, feed my children. I still have to pay my power and my phone and things like that. So those aren't considered additional living expenses.
No.
Yeah, right? So you're still responsible to pay those things. It's not the intent of the insurance company to deny claims. So I'm not sure how the claims process will work with each individual homeowner to do the additional living expenses and to settle with people. That they have to have those conversations with their claims adjusters now, unfortunately, because once a claim has happened, it's out of our hands and into the adjuster's hands.
And would the adjusters be locally or just say nationally?
They try to keep them local as much as possible, but because this is a huge loss, there's going to be adjusters called in basically probably from all parts of Canada to help assist with this.
So how about someone, I was talking to one of my clients, and thankfully their house didn't burn or have damage. They just need a new fridge.
Yeah.
How easy is it for someone to do that?
So I did have one of my clients call me the other day and ask me that specific question. And, the insurance coverage, of course, as we all know, is to cover large losses.
Yep.
I think that's up to each individual, whether or not they want to claim on a, fridge and spoiled food, because the coverage would have to be confirmed with their adjuster and their broker, right? But my client just called me and said, you know what, I lost my food and some freezer food. That is a claim that can be made, but keep in mind that you have $1,000 deductible in most cases. Okay. So I'm not sure how each adjuster is going to assign that, if they'll waive the deductible or if not, but then you're going to also probably lose your claims-free discount.
Which would be?
Over a 3-year period, which could be hefty. So if you have normally, like a normal house insurance policy could be anywhere between $1,200 and $2,000. So over 3 years, you could potentially lose $200 or more.
Wow.
On your insurance for not having a claims-free discount. So it's really important to have that conversation. Is it going to affect my claims-free discount? And what is my deductible?
Very important.
Yes.
So just to sum things up, as just, I know we weren't involved with the fire, which is, you are grateful, but you should be talking to your insurance broker probably, as soon as you make a change with the house.
Yes.
Or at least every other year.
Yes.
And look at the value and to make sure that whatever your replacement cost is actually what your replacement cost is going to be for the house.
Yes.
Are there any other tips that you would give to someone?
I would definitely say that the most important thing is to talk to your broker if you have any, like if you have just a twinge in the back of your head and you're thinking, is this going to make a difference? Like you're putting down new baseboard, you're doing paint job, you're putting in new light fixtures. No, that's not so much. But you're finishing your basement, you're putting a pool in, you're adding addition onto your deck, you're doing a new roof, you replaced your hot water tank, you updated your heating system. Those are the things that we really need to know about. Adding an addition onto your house.
Yep.
Those, because it's too late when there's a claim, and if you have a water damage claim, even a water damage claim, it comes from your first floor, it goes down to your second floor. You may have bought the house a year ago, the basement wasn't finished, you didn't get around to calling your broker, but you finished the basement, there's a water claim, your basement's finished, now what? Yeah.
There's nothing, yeah.
And the other thing too that I'm finding is that in a lot of cases now people are doing their home run businesses. They're working from home. You know, you're doing some backyard work, you're doing mechanics work, you're doing, you know, things that are not within the residential homeowners. Those are the things you need to let your broker know too. So if you're doing any commercial work, you're having home offices, you're having clients come to your home, that changes the whole exposure of a residential homeowners as well.
Absolutely. Well, certainly some food for thought today. So I totally appreciate you taking the time to come out
My
here.
pleasure.
Again, it couldn't have been just us here at home having these conversations. And I just think it's so important, you know, that you get out there and look at your insurance policy before it's too late.
And the other thing too that I just wanted to mention is that under your auto insurance, like I was mentioning to you before we started this, that a lot of people assume that they, you know, in these cases of fires, that their vehicle's safe, you know, they have liability insurance coverage on it, but as soon as there is a fire and they have no comprehensive coverage, there is no fire insurance on their vehicle. And comprehensive insurance is just an easy phone call and just say, you know, how much does it cost to add fire and theft to my vehicle, or comprehensive without glass?
Yeah, no, very important. Well, thank you for your time today.